Ladies and gentlemen, welcome to Woodburn Accountants and Advisors China webinar series on e-commerce in China. The goal of ours for this week was to provide registrants and attendees to each of the webinars to give an overall view of the e-commerce market in China. So on Monday, I was presenting on brand protection in general, and then specifically on brand protection strategies for e-commerce platforms. Yesterday, I was reflecting on how to develop an e-commerce business model, everything from doing things from your home jurisdiction, like the cross-border e-commerce, or actually moving that step forward to doing something on the ground in China. Both of those sessions, the recordings will be put on our YouTube channel. So even though you didn't register for them, you will be able to look at the recordings on our YouTube channel once I send you those links. I'm very happy, because then I don't have to really do all the talking, to have the Elanders group, both Kevin Rogers and Alan Chow, to present today and tomorrow. Today we'll be looking at China cross-border e-commerce, and tomorrow we'll be looking at the China domestic e-commerce market as well. These are very exciting presentations. I've looked through them myself, and they really give a fantastic overview and a step-by-step guideline on how things work. So I'm very, very excited to have both Kevin and Alan on today. If you haven't registered yet, also know that on Friday, we have a session on how to find the right people in your organization to implement your e-commerce strategy, if that is a strategy that you're looking to develop to hire in-house and have people in-house. So one of the beauties, and this is again something I was highlighting in yesterday's presentation, it's a homework piece for everybody, where when you're trying to develop a strategy for the Chinese market, a big understanding when developing that strategy is, what do you wish to do in-house within your organization, and what would you like to outsource? And today, Kevin and Alan are going to be highlighting to you that you could actually outsource everything. So this is a fantastic test route to market if you're looking to just hand over the reins to somebody who can do everything for you. And again, I don't want to give too much away, but Kevin and Alan will be presenting on that today. If you've been to my webinars before, you will know that there are a couple of technical slides at the beginning. Now, I always want to know who my audience is, and I'm pretty sure that Kevin and Alan would love to know who you are as well. This always helps to direct the conversation and direct the presentation. So there is the chat section in your control panel. I want to know who you are. Are you a newbie to China? Are you a startup in China? Are you an experienced China hand? A lot of people in the last few days have been coming up saying they're newbies, which is fantastic, because it means that I can start the presentations, and for Alan and Kevin, they can start the presentations really from the ground up in terms of the content. So I picked out names yesterday starting from the alphabet A. I'm going to start from the back end. So Victor, Vicky, Sun, Sue, Chung, Samantha, Sharon, Olga, let us know who you are, okay? Let us know why you're here, who you are. If you don't really want to type, just write newbie, write startup, write experienced China hand. Usually the newbies are those of you that are looking for the opportunities and are trying to educate yourself on how to formulate your strategy and how to formulate your sales channels into the Chinese market. For the startups in China, it's those of you that have probably been already transacting in China, either directly from your home jurisdiction or with an entity on the ground in China. And the experienced China hands are a little bit like myself, Kevin and Alan as well. We've all lived in China. Some of us still live in China. And you know, for us, it's always important to get fresh ideas and new updates. So even though there are experienced China hands on today, it doesn't bother us. It's a great way to develop our ecosystem and our network of people. So Kevin and Alan, this is for you. A couple of people responded. Crispin is a newbie, Samantha is a newbie, Gaius is an experienced China hand, Leon is a startup, Olga is a newbie, Alan is a newbie, Mateus is an experienced, so Martin is a newbie. So probably you want to direct the presentation more towards the newbies versus the startups and the experienced. We really appreciate it when you guys interact. So use this time efficiently, okay? We are here to educate you on how things work in China, okay? Obviously, indirectly, we're trying to sell our own services. Who wouldn't? But ideally, we're trying to tell you this is how you should be doing things in China. This is an education format for you to learn how things work in China. So you have the questions section in the control panel. Please use it to your advantage. Ask questions, ask comments. Kevin, Allen, and I will be staying online to answer all the questions and comments that come in. So if that means we run over time, it means we run over time, but that is our promise to you that we will be staying on the line. Just remember, this is your time spent. It's a free webinar session. Use it wisely, okay? And I want to thank you all for joining again as well today. Just to introduce myself, again, because of the issues that a lot of people are still working from home, there are no webcams. I've gotten a lot of feedback that people don't have the necessary bandwidths. So this is just to put a picture to the voice. My name is Christina Kohler-Coluccia. I'm the head of business advisory at Woodburn Accountants and Advisors. In August, I celebrated my 17th year in China, working only in the corporate services and compliance sector. And I've worked with only international companies that are doing their inbound investment into the Chinese market. Everything from pre-investment advisory to developing market strategies to the actual implementation of their structures, whether that be direct from their home office jurisdictions, subsidiaries, or whether it's actually implementing a subsidiary in China. And then ultimately focusing on the growth aspects of the organizations in China. I'm a speaker, I'm an author, and I'm also the creator of the China Roadmap methodology, which if you're interested in joining, there is going to be a webinar session on October 13th. It is basically a roadmap with bullet points for the 9 superpowers that you need to achieve and the 3 milestones to make sure that your focus stays on the growth of your China business. Now, one of those superpowers is developing a ecosystem in China. And this is where, and this is why I have Kevin and Allen joining today, because they are part of my ecosystem. When clients come up to me and say, Christina, I don't know, I've had a bad experience with a logistics provider, or I need now warehousing facilities, or I need to have a solution for an e-commerce model, Kevin and Allen are my go-to guys because I've worked with them. We've worked together on clients. We're still working together on clients in regards to building up a fantastic strategy for companies. I can't do everything on myself. I don't do every single service. And this is why it's so important for everybody on here today to develop their own ecosystems, their own network of partners to collaborate in the Chinese market. So this is why I have Kevin and Allen joining in today to highlight what they can do for you in terms of building up a cross-border e-commerce model. So Allen, Kevin, I've unmuted you both. Oh, there we go. You're both unmuted. Go ahead with today's presentation.
Perfect. Thank you, Christina, and thanks to everybody for joining today. My name is Kevin Rogers. I'm President of Sales and Marketing for the Elanders Group. I've worked for Elanders since 1999, fulfilling several roles. And during my time with Elanders, I've worked in the UK, Czech Republic, and more recently, 4 years in China between 2015 and 2019. Today, I'm co-presenting with my colleague in China, Mr. Alan Chow. Alan has tremendous local knowledge of China, and I will hand over to him to introduce himself.
Thank you, Kevin and Christina. Hi, everyone. This is Alan here. I have been working with Mentor Media since 2016. My current position as Business Development Manager. My previous background, I have been working with companies like Dior in the fashion industries and also in the pharmaceutical space when I was in UK. So right now I'm in China, and I'm thrilled to having the presentation with you guys today.
Perfect. Thank you, Alan. So first of all, let me briefly explain who Elanders are and what we do. Elanders is a Swedish-owned global business. We have a presence in 20 countries around the world, approximately 90 facilities, and about 6,000 employees, depending on the period of time. We do flex up during peak periods, normally in quarter four. But we do offer an end-to-end supply chain service as well as print and packaging solutions. Next slide, Christina. So this is a snapshot of where we are in the world. So we cover Far East, good presence in Europe, and a good presence in the Americas. So if we just take a closer look in terms of our presence in China. So we have 11 of our own facilities throughout China, strategically located to offer a comprehensive service. So along the coastal routes and also inland China to offer a full logistics supply chain service, as well as other countries such as Singapore, India, Taiwan, and facilities in Hong Kong. So in terms of our service, as I mentioned, it's an end-to-end solution. So we do offer global supply chain management. We take full responsibility from the point of origin where the product is manufactured, using various modes of transport to ship around the world, lots of customs activity in terms of clearance to make it easier for our customers. And then we have our network of facilities, which are on warehouses, and we do lots of value-added services there. And then once the orders are placed by our customers or our customers' customers, then we manage the outbound logistics, whether that's through traditional routes, through retail, wholesale, distributors, as well as e-commerce. This is a rapidly growing part of our business, and we've got some fantastic experience there. So a lot of e-fulfillment. We even get involved with some customers in collecting payments, setting up the web stores themselves, and then shipping all of the goods out to the consumers. And if there is a need for returns logistics, we can also manage that too to make it easier for our customers. So the next slide is the introduction to our webinar today. And the webinar has been structured to be insightful, interesting, and educational. Now, there are many aspects involved to set up and operate a cross-border e-commerce store in China. It's not simply opening a store and selling to the consumers. There's a lot more to consider. First of all, you have to understand the market. It is very different. Being from the UK myself, my 4 years in China were fantastic. But the thing that I realized very, very quickly is that it's a completely different landscape to what I've known from Europe. There's also the options in terms of e-commerce platforms, understanding the order flow. There are more than one warehouse option, which we'll cover in the webinar, and other important aspects such as customs and tax and how the payments work. So let's dive in and start by looking at the market and some key facts. And next slide, please, Christina. So the thing that always strikes me about China is that the numbers are absolutely staggering. So cross-border e-commerce in 2019 reached a level of $92 billion US. And that was an impressive growth of 21% on the previous year. And there are estimated to be more than 800 million Chinese consumers accessing the internet via mobile devices, and a lot of cross-border e-commerce transactions are actually transacted on mobile devices. There are some regulations in place, and there's limitations in terms of what a consumer can spend, and that's very useful to know. So within one single transaction, it's 5,000 RMB, and the annual limit for Chinese consumer is 26,000 RMB. They can exceed that, but they have to pay duty on any spend above the 26,000. And popular products which are sold on cross-border e-commerce are cosmetics and beauty, food and beverage, fashion and jewelry, baby products such as baby formula, and much more. And one important thing to really highlight to international brands who are considering entering the China cross-border e-commerce market, it's not a quick win. You have to be committed to at least 2 to 3 years time frame to establish your brand in China. If you're starting from a base point of 0 awareness of your brand, it will take 2 to 3 years and a commitment to a really effective marketing plan. So be prepared for that long-term commitment. And also, cross-border e-commerce in China is dominated by marketplaces. In Europe and the US, you have .eu platforms, .co.uk, and .com, where a lot of brands have their own web stores. In China, it's heavily dominated by marketplaces. So if you think about Amazon, that's what the landscape looks like in China. And another important fact about China, we'll cover this in more detail tomorrow, but China in August and September is now starting to show a year-on-year growth. And that's the first market globally to show growth since the start of the COVID-19 pandemic. Next slide, Christina. So routes to market, very important in terms of how first of all you have a presence there, but also how do your products reach the consumers and what options do you have and what do you need to understand from a customs and tax perspective. So moving on to the next slide, we take a look at the platforms. So as I mentioned earlier, it's dominated by marketplaces. So if you think of Amazon, and I mentioned earlier there's 800 million registered mobile users, there's also 800 million registered users on the 2 major platforms in China, which are Tmall and JD. We've listed some of the main players within the e-commerce platforms. There are other, and in tomorrow's webinar, we do actually give more insights in terms of the scale per platform as well, in terms of number of registered users and transactions. Now, something else which is really starting to ramp up is the social shopping platforms. So WeChat and Little Red Book are 2 examples. So this is where to get started, it's a much lower cost, but the route to market in terms of reaching the consumers is a different method. And again, we'll cover that in tomorrow's webinar. So this is where you engage influencers, key opinion leaders, KOLs as they're known, and let them generate the traffic to your e-commerce store. So therefore, what you need is a bigger budget allocated towards that influencer marketing. And it's suitable for things like beauty, cosmetics, also food and beverages and clothing and so on. So that's just a quick snapshot understanding of the platforms. And then if we take a look at the next slide, this highlights the types of stores that you can open. So there are 2 main options. One is the one which is widely known, that's a flagship store. This is where you have one brand with possibly multiple products, and they have the sole responsibility for the setup, maintenance, marketing, management of all of the content within that flagship store. There is another option, which isn't that widely known, but it is very effective, and this is what they call an umbrella store. This is where you can actually collaborate with other brands, so you have a multi-brand store with multiple products, and you can share the setup costs and the running costs. It's also a good option if you want to use this as an incubator before moving to your own flagship store. I would say the recommendation would be that it would take approximately 10 brands to get started. This is to make the umbrella store worthwhile and interesting to consumers and also the brands. And it could be a category specific store such as health and beauty or food and beverage. Now, my latest information is that this is still popular with JD.com and particularly WeChat on the social shopping platforms. But it's not so popular with Tmall these days. Tmall are focusing much more on the flagship store. They dominate the marketplace, so they have a market advantage there. So they're the two main options that you have in terms of what kind of structure of store you can open in China. And then once you have a store, the big question is, how will the Chinese consumers find you and your brand and your products? But this is where you really need to work with an effective marketing partner. Now, the marketing channels in China, they're all called different things, but they're similar in many ways to some of the marketing channels that we're used to in other parts of the world, such as Google and Twitter and so on. You have WeChat, which is a social loyalty live streaming platform. Red, which again is another social, lots of reviews on there, but you can see the number of active users on all of these platforms. So the opportunity there to reach the Chinese consumers is incredible, but you just need to make sure that you find the right partner to bring together the right strategy to make sure that you don't set up the wrong plan, and therefore it could be a very expensive mistake if you get that wrong. But the access to the Chinese consumers, many channels, you really just need to work with the right partner to make sure that you're operating on the right platforms for your brand. And then once you've covered off your marketing plan and your store is set up, then you need to think about the shipping models. And on the following slides, there are two main options. One is the direct shipping model, and this is where the products are shipped one by one, normally from the brand owner's country. And the process for that is the Chinese consumer will order a product on the marketplace. The product is picked, packed, and shipped from the country where the brand is, UK, USA, Europe, or other. And they're shipped one by one, normally air freight, into China and dropped into the domestic delivery, which is the final mile to consumers. The second option is the bonded warehouse option. And this is a warehouse sitting in a China free trade zone. So the products which are shipped in bulk to the free trade zone warehouse are still classified as being outside of China at this stage. So there's no duty to pay on the goods arriving in China. One of the big advantages with this one is the products sitting in China means that the lead time to the consumers is short. So the order is placed by the Chinese consumer. The product is picked, packed, and shipped from the warehouse in China and then dropped into the domestic delivery network. So much shorter lead times. The big difference here is it's committing to shipping products in bulk to sit in a warehouse in China ready to serve the consumers as they order. So the next thing to understand is customs and tax. It's not the most exciting topic, but it is important to understand the key points. We won't cover all of the content on the slides because there's a lot of detail there, and we thought it was best to put the detail on the slides. They will be shared with you guys after the webinar, so you can review them in much more detail. The key points to mention on this slide. So we've got the platforms are connected with China Customs, and that's for a good reason. So China Customs need the information for each shipment which is sent into China, and that's all tracked digitally. So the platform connected to China Customs passes over the information. That's very important for the warehouse if it's outside of China, because the information shipped with the product regarding the shipment, the payment, and the order details must match the information that is sent digitally to China Customs. If it doesn't match, there could be an issue and it may get stuck. And another question which is commonly asked is, do you need to register with the China Inspection and Quarantine when shipping cross-border? And that's a it depends answer. It depends depending on the model that you choose. If you take the direct shipping, which is also known as the personal parcel route, then you don't need CIQ clearance. However, if you take the bonded warehouse model, the goods do need CIQ clearance. But just to put your mind at rest there, if you do take the bonded option, your warehouse provider will manage that CIQ clearance for you. So there's not really anything to be concerned about. And if we take a closer look on the next slides regarding the two typical shipping models, being the direct shipping and the bonded warehouse model. First of all, we'll take a look at the direct shipping. So this, as I mentioned, is also known as the personal parcel route. There's a clear distinction and benefit with direct shipping model, and that is that the packages don't necessarily get checked or taxed. So in very rare cases, some packages are spot checked. If they're spot checked and any VAT is due, then again, the brand owner doesn't need to worry about that because that's taken care domestically at the local post office with the consumer. And the Chinese consumers are very well informed about cross-border e-commerce, so they know that this could be the case. But some of the benefits for the direct shipping model is that the package is already checked, all taxes are paid by the consumer, you don't need to stock any goods in China, and there's no CIQ clearance. Clearly, there are some disadvantages, and the disadvantages are really two things. One is because they're shipped one by one overseas, then the parcel cost, if you start to build a volume, that translates into a much higher cost than it would be if you were doing the bonded warehouse option. And the other thing which is important to keep in mind is the longer shipping lead times. So they can be anything between 7 to 30 days, depending on the process of clearing the customs and the shipping method. So if you are considering a long-term commitment to China, and if you do start with direct shipping, it's sensible to keep the bonded warehouse option in mind and do your homework to support a much bigger business in the future. And then moving on to the bonded warehouse model, as I mentioned before, the warehouse is actually sitting in a China free trade zone. So all of the goods are classed as being outside of China. So advantages there is that there are no tax and duty to be paid. There is also a discount for the bonded model. And the bonded model requires lead times down to 2 to 4 days compared to 7 to 30 days on the direct shipping model. The bonded warehouse model does require the CIQ clearance, but that is actually included within the 2 to 4 days lead time. And as I mentioned previously, that will be taken care of by your warehouse provider. Another point to note is that occasionally exporters need to pay an extra consumption tax. Now, this is normally for luxury goods. And if anybody is interested to go into more detail on this particular point, we can take an offline discussion. But there is a model in terms of consumption tax being applied if the value exceeds 10 RMB per gram. And this is a case by case and regulations can change. But again, this is why it's important to have a local partner who keeps you informed of all of the changes in regulations. So I also mentioned just regarding any duty to be paid if consumers do exceed the limits. And just to re-emphasize, current limits today per transaction are 5,000 RMB and annual limits are 26,000 RMB. So if we compare the two, direct shipping versus the bonded warehouse model, so direct shipping makes it very simple. You don't need to stock any products in China. There's a one-by-one shipping process, which can be more expensive as volumes grow. And you have to accept that there are longer lead times. Taxes only rarely apply, and if they do, then that's paid by the consumers. And if you're looking for a longer-term solution, then you should really consider the bonded warehouse option due to the importance of lead times. And the final point on the direct shipping is that CIQ is not required. On the bonded warehouse model, products are shipped in bulk to China. So if you have a good scale of sales volume in China, then that could be very cost advantage. The warehouse is located in free trade zone, so you don't need to pay any duty. The total cost of shipping each parcel, once you gain a volume, can be significantly lower. And a big advantage is the shorter lead times. Tax and duty to be paid only when clearing customs, but that is actually covered within the transaction process on the cross-border e-commerce store. So again, that's not something the brand owner needs to take care of. It's just more for information to be aware of. And as I mentioned, there are cases where there is extra consumption tax depending on the product. Again, that's paid by the consumer. The CIQ clearance is required, but that's taken care of. And it's much more suitable for the higher volume of sales and a longer term commitment to China cross-border e-commerce. So the next thing which is very important to understand is, how does the payment work? So Chinese consumers pay in RMB, and then the payment gateways attached to the e-commerce stores, they collect the RMB payments and buy foreign currency at the spot exchange rate. Then the value will be sent to the payment company's overseas accounts and then transferred to the merchant's receiving bank during the settlement. So this is a very established process. It's very simple. It's all taken care of in the setup of your cross-border e-commerce store, and it's a very effective way of getting your cash into your foreign bank account for transactions in China. So I think that pretty much covers all of the tax and the customs and payment aspects. It's also interesting to understand how the order fulfillment flow works for both direct shipping and bonded warehouse model. So pretty much the order fulfillment flow is the same for both models. The only difference is that the warehouse is either sitting in your country or it's sitting in the bonded free trade zone on the ground in China. But effectively how it works is the Chinese consumers access the marketplaces, they place the order. When the order is placed, the details are sent to two places. One is the China customs, the other one is sent to the fulfillment company, who is your warehouse provider, or maybe your own warehouse. So then the order is picked, packed, and shipped. And as part of the cross-border e-commerce store setup, then you will have your shipping provider integrated so that shipping data is then sent automatically to the consumer so they can track it themselves. And then the order is shipped to China, clearing customs, and then the final step would be the goods being received by the consumer. And the receipt information is then sent back to the platform so it completes the loop in terms of visibility and traceability of the order and receipt. And one thing which is also important to consider is what happens if your Chinese consumers have a problem with any of the products which are shipped. Once the product is in the domestic market, they can't be then exported back out of China. So you need to set up a facility if it's necessary to manage your returns. And the integration points for the order fulfillment flow, there's the market store and the brand owners system. So then you get the data related to the orders. There's the integration with China customs for all of the order details in the event that anything is spot checked. And then there's the warehouse and fulfillment system, and also the courier provider, the shipping provider that you're using for the final mile. The next slide is just a list of important points to note. So I mentioned earlier that the importance of providing the same information with the package that was sent to China Customs, and this is the commercial invoice and packing list with each shipment. I must stress that this is so important because I've heard lots of cases where there were issues, and what happens is if the package is one of the spot checked packages, then I can guarantee you the order will get stuck in China Customs, and then you will need somebody to manage that process for you. And if you're outside of China, that could be a big headache. So ensure the goods match the packing list. China labeling is also required, either on the product and on the website platform. So the information about the products must be translated into Chinese. And you must select the right shipping service where the track and trace is important. This will make it so much easier for you as the brand owner to manage any queries and to pass over the track and trace to the consumer so they can follow that themselves. And as I mentioned, consider your reverse logistics for returns. And if you do experience any issues at customs, the shipper and the store owner are notified. So it's not that you won't know about it, it's just that you will need a good local provider to help you resolve any issues. And one final point is when volumes grow, for a cost-effective and a much more efficient option regarding lead times, then the bonded warehouse model could be the right model for you. So that covers the order fulfillment flow. And what we wanted to do was to provide a step-by-step guide to success, because it's very easy to make mistakes. During my 4 years in China, I was absolutely amazed at how the whole e-commerce environment operates. But I was also equally surprised to hear that so many people had issues, and it was mainly because of a couple of key components that they just didn't follow in terms of a step-by-step guide. So what we've provided is a step-by-step process. And so what is required? First of all, you need to register your brand and trademark in China. This is so important. There are so many companies who've had issues. And the remark here is find a reputable service provider to help you do this. Well, I know Christina, as one of our partners within our network, is very experienced and very professional at doing this kind of service. And then step two, and this is where more companies have failed that I've spoken to, and this is the market research. So understanding the landscape in China, it is so different to Europe, America, and it's really important to find the right market research partner. And so many brands have failed because they've launched the store without understanding the market, understanding Chinese consumers, and then it's just set up to fail. And as part of the market research and budget planning, then create a marketing budget in line with your sales forecast. And if you find the right marketing partner, they can make recommendations about what your marketing budget should be in line with your sales expectations. Step three is 2 parts. So you need to make some decisions. So decide on whether you're going to operate direct shipping or bonded warehouse model. And also which e-commerce or social commerce platform will you launch in the beginning. Which products you will sell. You then need to build your store and include all of those integration points. And again, finding the right partners, they can help you with those integration points, which includes choosing the right warehouse partner. And then you need to, as part of that process of setting up your store, is to register your products with China Customs. So find reputable partners to work with on marketing and the warehouse options. But I would encourage you to do your homework and also ask for reference customers to talk to. And if you're talking about a high value or a high volume of sales, then something else I would recommend when travel allows it is to visit your warehouse provider to make sure that the environment, the conditions, the processes are all set up correctly to support your business. Step 4 is to develop that marketing plan and choose which marketing channels that you will reach out to the Chinese consumers. Now, this can be done in parallel with the store build and product registration. And generally, the company who will be building your store will also have the marketing expertise. So that's something which you can bundle together. But on an ongoing basis, China is very dynamic. So you have to remain agile, test various approaches, and adapt accordingly to make sure that you're hitting the sweet spot and reaching the consumers in the right way. Step 5 is if you take the bonded warehouse model, then you'll need to organize shipping your goods to China. And it's just making you aware that depending where you are in the world, that can take anything up to 40 to 50 days. And if you're doing the direct shipping model, it's selecting the right parcel service provider. And step 6 is optional. You can operate a cross-border e-commerce store either from your own country, or you can work with your marketing partner in China. The benefits of working with your partner in China is that they can offer local customer service and support. The one thing, well, one of the many things that I learned during my time in China is just how fast-paced and how dynamic the market is. And if Chinese consumers ask a question, there is a high expectation that they will receive a quick answer. Now, if you're in a completely different time zone, that's going to be challenging for you. And this is where having a local partner could be advantageous. And if that is the case, then you would need to train your partner about your products so that they can provide the customer service on the ground in China. So that's pretty much the content in terms of routes to market, covering all the important aspects, and also a step-by-step guide. As Christina mentioned at the beginning, we do offer and we'd like to promote our services in terms of an end-to-end solution. And we're able to offer a complete end-to-end solution through the powerful partnership that we've established. So Elanders has the global logistics, project management, regional and China warehouses. We also do the fulfillment logistics, and we can manage your returns. So we can manage global businesses in their local markets through our presence across the world. And then within China and within the respective areas of expertise, we have Woodburn Global offering those really important business support services and really valuable service in terms of registering your entity and trademark. And we also have a partnership with a very experienced marketing and market research company in China. It's owned by some Swedish guys, but they have a team of around 80 people. And their top management consists of 6 or 7 people, and I think 4 or 5 of them are Swedish. The rest of the team is local Chinese, so they understand the market, they understand the platforms, they understand the consumers. So they can offer really effective market research. They can be your trading partner, which is where you set up the store. So they can build and design that. They can manage all of your marketing and even take care of your customer service. So you can outsource, as Christina said, the whole service, or you can pick and choose which services that you would like to tap into. So the next slide just gives you a snapshot of some of the brands that we've worked with. Together, we've offered a comprehensive market research service that includes things such as competitor mapping, sales channel analysis. So targeting groups, who is your customer, what are their preferences, what are their buying behaviors, and looking at market size and growth trends, just to make sure that you're getting the right advice about where you should be developing your business. And also, is there a market there? Is it worth actually entering China? But also importantly is keeping you on the right side of all the regulations and any barriers to entry. So, we're happy to talk. We're happy to discuss all of the aspects of cross-border e-commerce. And what we've effectively done is we've designed a partnership to make it very simple for the brand owners. I've heard so many times in the year since I returned from China about the exciting opportunities that Chinese cross-border e-commerce presents, and it is a fantastic opportunity, but it's not so simple. And this is where you need partners who have a mutual interest, ones that will focus on protecting your brand and also help you drive sales. And our partnership it's a win-win, because we're focused on your business, and if your business is successful, then we are successful. So that's covering everything around logistics and China e-com experts, controlling your brand experience, so you would actually control the brand experience. We manage all of the marketplace and social shopping platforms. We can support you if you choose to go with a flagship store or an umbrella store option. And you have the Elanders project management, but also the local China expertise from all three partners, Elanders, Woodburn Global, and Aventura. And if you did start with a cross-border e-commerce store, then we also have the experience in the team to help you migrate to a domestic store, which we will be covering in tomorrow's webinar. So as I mentioned, we've designed this to make it very simple for brand owners to enter China and to give real, transparent, honest feedback and advice to help you navigate a path to success. So just to summarize, so cross-border e-commerce in China is a fantastic opportunity. The scale of the market is absolutely staggering. The number of active consumers in China is phenomenal. We've covered the routes to market. It's important to work with reputable partners. You need to consider which platform is right for your brand, and also who is the right person to work with to develop your marketing plan. And then you've got some decisions around direct shipping or bonded warehouse model. Again, we can work with you to help you make the right decision. We've covered how the payment works, the order fulfillment flow, and we've also given you a step-by-step guide of some key points, the main key points that you need to make sure that you follow to have any chance of succeeding in China. And the partnership model we offer, as I mentioned, it's a complete end-to-end service for logistics and e-com, as well as the business support services. We can help you migrate to a domestic store if you want to do that in the future. And we've set up the partnership to make it simple. So anybody who is interested to talk to us about an opportunity to open a China cross-border e-commerce store, then we're here to talk with you guys. So the final slide is just to give a heads up on tomorrow's webinar. And this is where we'll actually be discussing and sharing information about the domestic e-commerce environment. Now, the cross-border e-commerce market is staggering in terms of numbers. If you join tomorrow, you will see even more amazing numbers on the domestic market. And the opportunity for international brands can be tremendous. So all I would say is, I'll not give too much away, but I would encourage you all to join tomorrow's webinar to find out more. And we have the contact details of myself and Alan, who are here to support you. If you would like to have a follow-up call, Christina mentioned that we're going to be sharing the slides so you can take a deeper dive into the content, and we're here to talk with you guys.
All right, thank you
Christina.
so much. Appreciate it, Kevin. Fantastic. I hope everybody enjoyed that presentation. I'm relieved because besides one point where I did make a mistake in yesterday's presentation, everything that I said yesterday matches what Kevin said. So I did make a mistake yesterday in terms of a question that popped up about returns, where I did say that returns could be sent back. And in actual fact, as Kevin highlighted in today's presentation, they can't be sent back. And just on that note of returns, Michael has asked a question about returns that I'll read out to you, Kevin and Alan. There is always a concern of returns, but if the pieces can't be exported, then how are you meant to manage that side of the business if managing the shipping in-house? There might be a couple of words missing in that question, but I guess the question that Michael is having is basically, if there are returns, you can't send them back, where do you keep them? How is that all how can it be replaced? How is that section handled?
Okay, this is probably two parts. I'll let Alan explain what happens when the goods are returned. But effectively what you need is you need a local company in China who can accept those returned goods. And the replacement would need to be resent by the original warehouse provider. So whether that was in the UK or the US or anywhere else in the world, a replacement product, if that's what the consumer wants, would need to be sent out from the original warehouse again. But setting up a facility in China, we have a number of warehouses around China. So you just need a domestic warehouse service provider who will offer you the service to accept those returned goods. Alan, could you explain what happens to returned goods when they are received?
Yeah, so usually when we receive the return goods, most of the time we will be doing, we call it the on-site inspections on the product itself, according to the brand owner's instructions. Furthermore, we will be some of the activities that can be done in the domestic facilities, such as scrappings, destroyed of the product, and then sending the replacement to the consumer address. Those are commonly being done in the domestic facilities. Just like what Kevin has mentioned, the product cannot be returned back to the origin place because the product has been already paid duty and taxes. So the only thing that we can only do is to send the replacement through the domestic facilities, or in other activities, we can also do in-house inspections for the product itself, refurbishment, if any, depending on what the brand owner's instructions, and further on to send the replacement to the consumer side. Yep.
Great,
Kevin,
Michael.
I'll leave it to you. Yep.
Michael, does that answer your question? You can just type in a yes. He says yes. Thanks for answering. Just to follow up, fantastic. I hope that was clear for you, Michael. Yesterday, Kevin, I was talking a little bit about, there's always a question of, can I ship my specific product from overseas to China utilizing the cross-border e-commerce method? And I was talking a little bit about the positive list. And even though if your product might not be on the positive list, there's no worries, you can still send it. Now, I got an interesting question yesterday from one of the attendees, Paul, who was asking, they are shipping beverages, and he used the terminology, there are special ingredients within those beverages. And his questions was surrounding around, is it better to contact the Customs Bureau to really verify that I can bring in my product? So whether you are in cosmetics or perfumes or whatever it might be, if there are, again, I do it in quotation marks, special ingredients, is it better to do a check with the customs to make sure there's going to be no halting? And do you do that in terms of the whole order fulfillment process, or even prior to that?
Yeah, absolutely. It's always best to check. You should always take the best approach is the safe approach. So check first. And this is something that we do as part of our setup. So we engage with brands, we look at the HS codes, and we can support, because obviously we've got the local team who engage with China Customs regularly. So as part of the warehouse setup or the logistics setup, that would be a standard part of our process to make sure that those products can actually enter China. But if you're unsure, always best to check.
Okay, fantastic. I don't think Paul is on today, but if Paul is going to listen to this later, at least that answer that question is answered. Mm-hmm. There are two questions from Alan. So the first question is, does Elander work with small businesses who have a turnover of less than £2 million, or do you normally recommend a business that is larger?
No, we have many customers who turn over less than £2 million.
Okay. Very brief, short and sweet. Thanks, Kevin. The next question from Alan is, would you recommend working with a distributor to develop the opportunity in China for cross-border e-commerce, taking on the risk of entering the market, but also taking the benefit of sales and understanding of how the brand lands? Now, before you answer that, Kevin, I just want to add something, because I had a phone call, and I highlighted this in yesterday's presentation. I had a phone call after Monday's session with a company out of the UK. And this leads me on to the question that I wanted to kind of make it as a discussion point is, with COVID-19 today, the fact that nobody can travel to China, and you highlighted that, nobody can go to China to visit warehouses and do inspections. nobody can make face-to-face visits and meet distributors face-to-face. What for you would be the best model right now, today, to kick off your distribution into the Chinese market? What would be your opinion on that?
My opinion, the best way is to work with a company who has who's an international company, because and that's not just because Elanders is an international company, but because if you've got a good reputation internationally, then you will have local people you can sit in front of face to face or on a Teams meeting, and they will be part of the whole team, just like the Elanders team in China are. So I would say work with a reputable international company if you can, and if you can't, then it's all about doing your due diligence. You know, it just comes back to that, doing your homework, choosing the right partners. It obviously can be a challenge if you can't get out and see them, because you know, they could promise anything. They could promise the world and deliver well short, or they could promise the world and deliver the world. It's a big unknown. So it's a really good question. It's not that easy to answer given the current situation, but I would say for me it would be try to work with an international company who has a reputation, and you can do your due diligence much easier. If you're working with a standalone Chinese company, then there are lots of questions you should ask, and make sure you do your homework properly. You know, asking for customer testimonials, asking for them to provide details about which customers they're working with, even get them to take a video and show the warehouse and the processes. You know, there are some things you can do, but not being able to visit does put you in a little bit of a compromising position.
I just want to.
Sorry, I couldn't give a clear answer on that one, Christina.
Well, let me give you also what for those of you that didn't join yesterday's, I'll tell you a little bit what my reply was to this client. So, I think obviously in an ideal scenario, you might work with a distributor that can handle everything from you, handle everything for you, from e-commerce to wholesale to retail. However, doing business in China is a lot about face-to-face and developing relationships, developing almost a friendship with your distributor, okay? And that requires quite a lot of trips, quite a lot of face-to-face meetings, understanding really what will be the responsibilities and roles of every party. As we can't do these trips right now, nobody can really travel to China. Sorry, nobody can travel to China unless you have a residence visa readily available. Of course, you have the option of Zoom meetings and video conferencing, but it's not quite the same when you're trying to start a relationship. So this is why I think the end-to-end solution that a company like Elanders is offering for cross-border e-commerce for right now is a fantastic starting point if you are a newbie or a startup in China, because you are outsourcing everything to an international provider, where if you're in the UK, and obviously if there are no lockdowns, you could go visit Kevin or visit one of Kevin's offices that is in the UK. Right? If you're in the US, you could go and visit one of the offices of the Elanders group. You're not stuck to actually communicating with the team that is in China, although you could also have a Zoom call with Alan, right? You have the ability to start your business. And I think this is the thing, is that, and this was a slide I had in yesterday's presentation, how do I begin? This is the fear of a lot of people, right? How do I begin? How do I start, especially with COVID-19? This is an amazing end-to-end solution to get you to start, so that when things start opening up again in terms of borders and everything, you can go to China and meet with distributors and expand on that scope of sales channels. All right. That's my 2 cents on the issue right now today. I think it's a fantastic way to just begin, to start, to test. And to then see how it develops as the borders start opening, and you can go and meet distributors face to face and develop that arm of your business if you wish to do that. Alan, I hope Kevin and I answered your question. These are opinions versus actual concrete details, but I hope that helped. We're going to move on to Olga. So Olga was saying, you say that there is a limit of 500 RMB per transaction, but then you say on page 23 that it is 50 RMB.
Okay, the limit per transaction is actually 5,000 RMB. Maybe I said 500. It should be 5,000. And on 23, let me just get the slide up. I think the 50 RMB relates to that's the tax exemption if the value is less than 50 RMB. That's for the direct shipping model. Now, in reality, most cross-border e-commerce packages are valued at more than 50 RMB. 50 RMB is a very low value. So that's just the limit which China Customs has, which if you do ship something in that's valued less than 50 RMB, there is no tax to pay at all. It's exempt. So I hope that answers that question. But
Olga had more questions, all about this 5,000 and 26,000.
Yes, yeah, no problem.
Item. So she was asking, how do you calculate the 26,000 per single customer? How is that tracked?
So
and I think, hold on, and then there was a second part is, if you can explain the taxes associated, is it customs duty or is it VAT? I think she's confused on that.
Okay, so it's tracked through the fact that the platforms are connected to China Customs. So complete visibility in China. They monitor everything. So the authorities know when a consumer exceeds 26,000 RMB. So if it exceeds 26,000 RMB, then they have to pay the duty on the value above 26,000. That they, as in the Chinese consumers.
Just to edit on what Kevin has mentioned, the data can be tracked and can be monitored because every single online end customers, when they are purchasing the items online, they need to verify their own identity, whether it's a national, local, foreigners. They need to ensure that their identity is registered through the online platform that they purchase from. So those data are, and the amount that they purchase can be also be tracked by the China Customs.
Olga, does that? Oh, go ahead, sorry. Kevin.
And it's the duty that they would pay on those products.
Olga, let us know if that answered your question or if you have any further questions on that, or if you need any further clarifications. Amy, you're asking about tomorrow's webinar. If you're interested in tomorrow's webinar, go to woodburnglobal.com/events and you can register for tomorrow's event. Amy, I will send you information on trademark registrations, not a problem. And you can go to our website for tomorrow's event. Astrid is asking, hold on, how does education advisory service and tutoring services in education for UK curricula and admissions to UK boarding schools get promoted in China? Online sessions is what I do. One, do you need to do an IP registration and trademark? How much does it cost? Can I do this from the UK without a local partner? So Astrid, this is not actually the sale of products, which is what cross-border e-commerce is. It's about the sale of products directly from overseas into China. Your question is more in relation to services and offering services within China. So there are no e-commerce platforms for that. That's just basically having your own website in China that is then registered in China, and then having a marketing plan surrounding that to promote the boarding school as well as the curricula. You probably need to develop content about that and have a marketing partner to help you with that. In terms of the IP registration, in terms of costs, in terms of trademark registrations, guys, I don't like to reveal that over the webinar. I do have competitors on here, as well as Kevin and Alan who have competitors on here. So we're not going to reveal pricing on this. If you do want to have some level of understanding about the pricing, please do send us an email, reach out to us, and we'll give you all the information and details. So Astrid, I hope that answered your question. Olga was asking, can there be any requirements regarding product certificates? Do you need to have a specific product license or product certificate to import goods?
I'll ask Alan to cover this one, if that's okay.
I'm sorry, can you mention it again, Christina? I think the line has a little bit been blocked from my side.
The question was in relation to product certificates or product licenses that might be needed for certain products for importation.
Yes, so there are certain products that require certifications, such as if your products are related towards electronic paste, some of certifications like the 3C certificates that you require to register before the products can be entered in the China market and even to sell online. There are certain certifications such as material specifications or even certifications that are proving that your product is not going to be harm to the society when you're selling online or offline. So there are several types of certification. It will all be based on your HS code to be determined by the China Customs what type of certifications that you need to register to apply before you can sell those products online.
In the main though, Alan, most consumer products outside of electronics, say nutraceuticals, the majority of consumer products don't need a special license.
So usually
like clothing, food and beverages, there's no need for any special licenses for a cross-border e-commerce store. You just need to register the products
At customs.
Yeah.
Yes.
What about for the luxury items? Like you were mentioning the luxury items like perfumes, cosmetics, alcohol, tobacco, or is there anything related to that would need to be registered besides the registration?
In the main, I would say no, but it's always a case by case. So we've recently established a food and beverage multi-brand store, and there wasn't any special licenses required from the producers. It's more the warehouse provider in China, which obviously needs to be licensed to provide that service.
Right. So that's a point to make to everybody attending today. Do your due diligence about the providers that they have the right licenses to cater to your products. So Michael has an ongoing question regarding the returns and refunds. Do you offer that service?
We do offer the return service. For it to be viable for us to offer as a standalone service, it would probably need to be a high volume, which the sales value or the invoice value would justify providing the service. Obviously, if it's one package every 2 or 3 months, then we'd have to set up all the processes, and the level of business probably wouldn't justify the cost to set up and manage the process.
Michael, I hope that answered your question. There is a question from Elena. Kevin has shown in one of his final slides the names of brands using Elanders services, which are all big brands, well-established players internationally and in China. Could Kevin share a few names of relatively new players, foreign small brands, that have been succeeding in relatively small amount of time in e-commerce in China?
Yes, I can. I'm just making sure I don't give away any of our customers' secrets. So I would probably give product categories rather than brand names. So we have customers who are producing cider, producing snacks, clothing, sports equipment. So, you know, we have small customers in those categories, but I wouldn't be allowed to show the logos without the customer's consent. These customers on the slide, we have their consent to show.
Elena, I think you need to remember one thing, and this is apart from Kevin and Ellen's services. When you're looking at the e-commerce market in China, yes, you've got all the big players, all the big fashion brands, all the big alcohol brands, all these really well-known international companies having their own shops. But it also means they have their own facilities in China, meaning they'll have entities in China, and they'll also be doing a lot of the domestic business themselves. But if you look at e-commerce stats, over 80% are predominantly small, medium-sized companies, either local Chinese companies that are small or international companies that are small. And as Kevin highlighted, you know, you have these umbrella store options where you have these, I don't know, 10, I don't know, he said at least 10 during today's presentation, at least 10 small brands that can get onto these one umbrella store option, onto an umbrella store to be able to facilitate and I guess share the cost, right, Kevin?
Correct.
Yeah. So don't, you know, we all put on our reference list the big names because it's easy to show the big names and everybody knows who the big names are. But predominantly when you're looking at cross-border e-commerce or you're trying to assist clients to develop that, it is really for the smaller brands. And as Alan, I think, was asking, you know, Elanders Group are helping companies who have turnovers of less than £2 million, right? So just keep that in mind. Jack is asking a question for Kevin. What budget level or levels ought to be considered for complete startup to cover social shopping platforms?
So this is, yeah, it's a good question, and it's normally related to what are your ambitions in terms of what level of sales do you want to drive, and what the general profile is in year one. It can be anything up to 25–30% of your sales target, and then in year two that would normally drop down to 20, and year three down to 15%, because that's when your brand starts to get more established. It's always a big push in the beginning because, you know, you're starting from a zero position and you really need to penetrate as much as possible. So if you, yeah, just work out the maths yourself, up to 25–30% of what you want to achieve from sales, you could expect to invest in marketing in year one.
I would almost say it's a little bit more.
Okay, that's fine. Yeah. Very subjective.
I tell you why. I think, and I mentioned this in yesterday's presentation as well. If you are a small brand, don't have the expectation that people in China know about you.
No.
So you can create a shop on any of these e-commerce platforms, but without having a valid marketing strategy, you're not going to get anywhere. Right? And if people really don't know you, you're probably going to have to spend more in marketing and PR in your first year than you are in any of the other years, because people don't know you. People don't know the value of your brand. You're going to have to build up a content strategy plan to show why your brand is fantastic. You might have to invest in KOLs in that first year to get people to know your brand. So I would almost say in the first year, you're investing much more in marketing just to get to people to know you. And know what you're all about and your philosophy and your ethos and, you know, what you do and why they should buy your product, versus in the second, third, fourth, fifth year where maybe your marketing budget might go down a bit. That's my 2 cents. Again, I'm not a marketing expert. I'm not in that field, but that's just my opinion in terms of brands that have been unsuccessful going into the market. They've underestimated how much marketing goes into getting people to know their brand.
And this is where our marketing partners can really add value, because they've got more than 9 years experience in e-commerce in China, both domestic and cross-border. So they can offer you the benefit of their experience and give good advice in terms of what the marketing budget should look like.
Right. I think that, and you should also be aware of how much you're willing to spend. So
Yes. Yeah.
if you look at the Chinese market and you look at year one, you know, if you've got other business in other countries, how much of your resources in terms of finance are you willing to allocate to the Chinese market? And that will also give you a guidance. Jack had another question regarding gateway payments. Are there other types of gateway payments besides Alipay and WeChat? And also, I have a question adding on to that is, do you have a choice on gateway payments, or is it up to the e-commerce provider in terms of what they use as a gateway payment method?
Okay, so this is probably one for our e-commerce partner to answer comprehensively. So I can come back with a qualified answer on that one. My understanding is that the likes of Tmall and JD, they use their respective payment gateways. The other platforms, there will be other options, but I can provide a follow-up on that one, Christina.
Okay. I'll send you the list of questions, Kevin and Alan, so you can answer people directly again.
Sure. Just from my latest knowledge that I have captured from, because I also do online shopping myself. So I'm also not a local citizen. So when I do purchase something online through Tmall or JD, I did notice that there are other platform gateways, payment gateways that you can be used, such as using an overseas credit card payments, Visa, Master. Even now, I have heard the news that they are even wanting to open up US payment gateways such as American Express, something like this. Yeah, so it's quite a new information that I can even see from my phones, that I can choose quite different payment gateways to make the purchase.
Thanks, Alan.
No problem.
Jack has a follow-up question. Does the Elanders Group have a process system of working with suppliers using or would like to use direct shipping method? I think you do both, bonded zone and direct shipping, right?
Yeah, the direct shipping, option, just to be clear, that would be a relationship by the warehouse. So if Elanders were operating a warehouse, say in Germany or France or the UK or the US, then we would set up the direct shipping service provider. If it's the brand owner's own warehouse, they would set up the direct shipping service themselves. That's not something we would get involved in, because by the nature of direct shipping, the warehouse integrates with the parcel service provider, whether it's EMS or whoever, the Royal Mail, say, for example, from the UK, then that's something the warehouse sets up. So if it's in a Elanders warehouse, yes, we can do it. If it's your own warehouse, it's something that you would set up.
Great, thank you, Kevin. Elena is asking whether you could share the percentage of success cases for the foreign brands. Sorry, let me read this carefully. Could you share the percentage of success cases, number of foreign brands highly successful with cross-border e-commerce in relatively short, medium amount of time? That might be a little bit difficult.
Yeah, it is difficult. There are no quick wins, no silver bullets with cross-border e-commerce. It does take time, as I mentioned, two to 3 years.
I was just about to say, yeah.
Yeah, you've got to be prepared for the long haul.
I think, Elena, just keep in mind, that first year, you're going to probably be spending more on marketing versus having any sales. Then comes the second year where, you're going to be doing marketing, and hopefully you're going to have a growth in sales. Third year, the same. So it depends on how you define short and medium amount of time. Very subjective. All right, another follow-up question is it the supplier hosting his products on the platform need to register with customs, or the platform does that registration with customs? Who does the registration with the customs?
Alan, do you want to take this one?
Yep, so this is actually coming from both sides. So from the platform perspective, they need to register the information with the China Customs, and also from the supplier side or the service provider side, they also need to register with the China Customs. So it's both synchronized. they both have to register with China Customs. But in terms of the registration form, there will be a slightly different information that they need to file. For example, for the for the product provider or service provider, they will need to register with more information with China Customs, whereas the online platform itself, they only need to register just the main categories of product information, not the whole details with China Customs.
So is the product then registered twice?
It's I would say you can view it as registered twice, but the information of registering is different. For example, the online platform provider will register the product information, the marketing materials, or anything that's related to what they're selling the product online, which is very online store centric. But whereas the service provider side, who's doing the, for example, the last mile delivery or even handling from the origin place to the warehouse facilities, those service provider will need to register the entire categories of the product in more detail, such as the materials, such as the HS code. But for the online provider, they need to register, for example, the product itself, how is it selling online, what is the refund policies, and etc. For example, very centric to the online platform itself.
Okay, I think overall, who is responsible for the customs registration?
So
is it the
overall,
supplier? Is it? I mean, I assume the supplier has to give information to those parties in order for it to be validly registered.
Yes, overall
but
it will be the supplier.
Okay, who has to give that? But they're going to be given a question list, I guess, of information that's needed, right?
Yep.
Okay.
Yep.
For example, Christina, we're operating a free trade zone warehouse model, and it's on a WeChat store. So the WeChat, the e-com partner, they've had to register the products, and then Elanders as the warehouse provider, so they've registered the products with the platform, and Elanders have registered the products with China Customs.
Okay.
Yeah.
Okay. All right. Barry has a question regarding this 26,000 limit. So I'll just read it out to you. That means that the company has no responsibility, and by company, I think he means supplier, has no responsibility at all to track the 26,000 renminbi limit and or follow up with customs duty or any VAT tax associated with the transaction.
That's correct.
Short and sweet again. Thank you. All right.
Yeah, all of the onus on that is with the consumer. As Alan said, each consumer has to register their identity, so that they buy the goods, so they're responsible for paying the duty.
Right. Amy, so these are the last couple of questions. Amy is asking basically, and again, Amy, I'm providing all the questions to Alan and to Kevin, so they will follow up with you. But Amy is asking about to get more details regarding the certification and technology issues related to that. Just remember, guys, as well as regarding the payment gateway options, just remember, everyone who's on here, you're going to get a copy of these slides. If you don't hear from Alan and Kevin, as quickly as you would like, because there is a lot of follow-up that has to happen with these webinar series, don't hesitate to just email them. There is the slide here with their contact details. You can go ahead, send them an email. You'll probably get a much faster response if you do that than if you wait for them to answer all the questions that have been popping up.
And we don't bite.
Yes, exactly. Don't hesitate to reach out, okay? All right, just a quick note. I am going to add here, I'm going to ask Alan and Kevin if they would like to add it here. If you want to set up a meeting in my diary, I'm going to just put the link here. I'm also going to, in the chat section, I'm also going to put ways of reaching out to me. Alan and Kevin, if you want to do that, you can type in the chat box, send it to the entire audience of ways they can reach you. That might be a little bit faster. And then everyone has the details in the chat box as well. I'm also going to give you guys my WeChat ID if you want to connect with me and build up your ecosystem. You can also email me. And then if you want to connect with me on LinkedIn, you can do that too. So Alan and Kevin, definitely add your stuff into the chat box and make sure you send it to the entire audience.
Yeah.
And that way everyone has it. And just as a reference point for anyone that is still on here, my colleague Joe is going to be calling everybody that has attended and registered to see how they enjoyed this webinar series, to get a little bit of feedback regarding my presentations, regarding Kevin and Alan's presentations, and also about Manfred's presentation on Friday. And then you can have that opportunity to also say, hey, I'd like a call with Christina, or hey, I'd like a call with Kevin or Alan or with Manfred. We're going to try and be much more proactive in regards to this webinar series to reach out to everybody. So if you're not proactive with us right now, be prepared. A call will be coming your way next week. And last but not least, if you haven't yet subscribed and you want to subscribe, join us for tomorrow's session. Kevin was highlighting what the content would be for that. It is not just about domestic trade. It's looking at the domestic market and what it means if you want to move further along with the whole e-commerce business. Okay, cross-border e-commerce, fantastic way to start things off. But there's so much more to learn if your volume or value increases in China. And don't forget, Friday is about if you want to start doing things in-house and hire people. Manfred's going to come on to let you know how you can find the right people regarding e-commerce. Jack is asking if you could have a quick chat with Kevin after the session. Jack, why don't you send Kevin an email with your number and your details, and then if Kevin is available, I'm sure he'll respond to you or reach out to you.
Yeah, okay. I'm available. No problem.
Jack's gonna send you an email, Kevin.
Super.
All right. Fantastic. I hope everybody enjoyed today. Kevin, Alan, thank you for today. See you all tomorrow. Hopefully,
thank
you
everyone, Christina. Thank you, Christina.
Thank you to all the attendees as well. I appreciate you joining in and linking up, and have a great afternoon or evening. Thanks. Goodbye.
Bye.
Bye-bye.